Okay, welcome to the Swing Trading with Cycles channel. It is November 14th, and so it's Monday. It's about 12:45, so middle of the day. And Friday, we talked about how we got a big bearish signal from the dollar, from the dollar index, I should say, the Dixie. And now we want to see, are we going to get follow through? And I talked about the fact that about follow through would look like that we would start making lower highs beneath the swing high, right? And I tweeted this morning, and if you're not following on Twitter, definitely take a look at the link in the description. That there was a clear zone. I'll look at them. I'll go to the monthly chart because that is easier to see there. I talked about there being a zone between 107 spot 68 and 109 spot 535. So like this area here, and where that's coming from is our September candle is our high so far for this structure, this monthly move. So we've had a 20-month rally, and this is part of the 3-year cycle, right? So we've rallied for 20 months as part of this 3-year cycle. And then we consolidated the following month, October. So October was an inside month of September. And now in November, we've made a new low below the low from both October and September. That is a big, important signal. Cycles aside, forget the cycles for a second, people. It's about the price action. This is an important signal. Now, we need to see how we react below this swing high level of 107 spot 680. That's where that comes from, right? That's the lower end of your range. And where do I get the higher end of the range? Well, that's pretty simple. It's the low from October, right? Because October was an inside month of September, and then November actually started as an inside month of October. We're not inside October anymore, right? Obviously, we had that big move down last week, and I've been talking about the fact that that was like 6% down in 5 trading days, which is an insane move for a currency, especially the world reserve currency. And so now we have to see, do we recapture this level? Because why would that be significant? Recapturing these levels would constitute a false breakdown. That's important because it works both ways in the sense that, like, when you have a violent move down, if you can recover that move back on the upside, you can have an equally violent move, like sort of counter trend, right? So that's the level that we're going to want to watch. Do we get back above 107 spot 68? That's your first signal. And then do we make our way up to that 109 area? And if we look at the daily chart, there's another very significant level I also tweeted about, and it's the high from Friday. It's very simple. The way you reverse a downtrend is to stop the downtrend first, so that could be a period of going sideways, but then you eventually need to start an uptrend. And the only way you start an uptrend is by making higher highs and then holding higher lows. So the first higher high we need to make is above the Friday candle. And that's why this is a Herculean effort, because not only do we need to make a high above the Friday candle, but then we eventually need to make a high above the Thursday candle, which means we need to get back above 110.99, basically 111. So let's think about that for a second. We're down here so right now as we're speaking, we're down here at 106 spot 83. And we're saying to reverse the daily downtrend, you really need to make a move to 108 spot 468 as a starting point. So that is, less than 2% from here. But you really need to get to 111 to start cooking with gas. That's another 4%. Now, it's certainly not impossible, but after already putting in a vicious move down like this, I find it hard to believe we're going to just kind of equally kind of V-bottom back up. But if we do, again, that's your signal. If you're short, get out of that short. Even consider going long. You don't want to kind of have a sort of a narrative and then just refuse to move to budge from it. You want to use the price action signals to understand how to react. The other thing I called out is this 200-week moving average, this yellow line. It's just calling to it at this point. I find it really hard to believe we're not going to at least test it, if not close below it. And obviously it's rising, so it's going to change day by day. But so far, and this is your daily chart, you can see we're already building an upper wick. What does that mean? That, as always, an upper wick always means there's a pullback on a lower time frame. Let's zoom into that time frame. Let's see what the heck is happening here, right? So we will zoom into the hourly chart. I'll turn this to auto. So this is your big move from last week, right? This is the multiple time frame analysis, folks. This is a big part of the edge. If you want to catch a move, you have to zoom into the lower time frames. You can almost think of the lower time frames as like a time machine, right? Like I look at the monthly chart. Well, what happens on the monthly chart is literally based on what happens on the lower time frames aggregated up, right? So like your 5 minute chart, your 1 second charts even. All of those aggregate up to the hourly, to the 4 hour, to the 8 hour, to the daily, to the weekly. All that to say, if you spot a hint of bearishness on the lower time frames, that could cascade higher and create bearishness on the higher time frames. So we're having a little bit of a rally. We have this little green day, which we were expecting. We talk about that all the time on this channel. Things don't move in a straight line. So if you have a really big move down, you're probably going to have some kind of retracement, some kind of lower high. So this big red candle is one of the candles that precipitated that move down on the daily. We got a little bit of consolidation, then another move down, some more consolidation, fresh leg lower. This is a lower high. I'll just mark the swing highs here, right? That's a swing high. That becomes a swing high. That's another swing high. That's a swing high. And so, again, this is a swing high. Like, as a reminder, once we go below that low, that becomes a swing high. Below this low, that becomes a swing high. Since that swing high that took us into Friday, we now started to base a little bit, and then we moved higher, and we held a higher low, right? You can see that is a higher low, right? We're in that 106.50 area. So that's also going to be an indication, are we failing, right? So this has all been basically consolidation. You can kind of think of this as like a bull flag of this big move down. Now, we would need to, and we already looked at the daily chart where we want to make that move above 108, but just zooming in on the lower time frames, before we can even get there, we have to get through 107.29, right? Like you can see that very clearly on this chart. We're consolidating between 107.291 and we call it 106.51. So which side of that we break tells us if we break below 106.51, we're probably heading to that 104.5 level I talked about. If we break above 107.29, we're probably going to at least test this 108 area. That's the high from that daily chart. Again, this is the multiple time frame analysis. These hourly candles are just, obviously, you aggregate all of them and you get your daily candles. So that's what you want to do when you get down to this kind of level. So that's the hourly chart. Let's zoom up a little bit or zoom out. Let's look at the 8-hour chart, right? So there are 3 8-hour candles in one daily candle. So it's not that different from the daily picture, but you can see here that same consolidation I talked about on the hourly chart. That's just one 8-hour candle that created that level that we're kind of oscillating in between. So if we break down below that, another way to think about that is that will create a swing high on the 8-hour chart. We already have these swing highs. And these swing highs look a little different because those were hourly swing highs, and now we've zoomed out to the 8-hour chart. So things are going to look a little different, and that's an important concept, right? What's a significant swing high on the hourly could be kind of meaningless on the 8-hour chart. It won't even show up potentially, right? But that's key. If we fall below 106.51, then we are creating a swing high on the 8-hour chart, and obviously by definition also on the hourly chart. So that's your micro levels. Those are your levels that you want to kind of watch. I'm watching this like a hawk because I'm looking to add to puts within on UUP, which is an ETF that follows the dollar index. But that's how you zoom in and use this kind of micro, very tactical analysis to gauge the bigger trend. Because what happens here on this hourly chart, on this 8-hour chart, is going to impact this daily, which will impact the weekly, and of course the monthly and beyond. And if you look at the weekly, speaking of the weekly, I'll just remove this. One sec here. Okay, so we talked about the idea that I just drew this just for sake of argument. Maybe this becomes an ICL, right, on week 23, and we get a little feeble bounce, and then we roll over and make a new low. Who knows? So this is either week 24 or maybe we're starting a new weekly cycle. That said, because of what we're seeing on those lower time frames, more likely that this is actually week 24, right? That said, we could get a weekly cycle low very soon and then start a new, weekly cycle advance. So we do need to be kind of aware of that. But like you can see on this weekly chart, that 104.5 area is sticking out like a sore thumb as well. And look how far above the 200-week moving average we are. Doesn't mean we're going to test that on this go around, but it does give you a harbinger of things to come, because at some point, price is going to consolidate. This is going to catch up to it, and it's going to catch down. But right now, we know what those key levels are. That 107.68 all the way up to 109.535. So that's your Dixie update. Thank you for watching. We'll catch you on the next one.